Hey, good afternoon, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday, December 20th, and I hope you guys have some great plans coming up for the holidays and this weekend. So we just got one economic news release, and it's a biggie. It's the final revision for the GDP for the third quarter. We had one earlier this month, but a lot of the ones we've had since, because we had the shutdown in October, some of those were delayed. So this is the final revision for the third quarter, and the last one we got was a 3.6. It was up from 2.8, and it got revised to 3.6. And the forecast for the final revision was at 3.7, and it dropped to a whopping 4.1. So this is painting an excellent, better than we can ever expect of the economy, where the U.S. is heading, and it kind of set the tone of where the Fed's decision of making the tapering. And again, it was a very modest one if you really think about it. $10 billion out of 85, reducing it to 75 billion per month, but very modest, and they're going to do that in increment and very modest steps as not to rattle the markets. So very good numbers right there. Let's go ahead and take a look here at the headline news, and we got the stock market all went up. Now the investors, what they're kind of looking at is, with all this behind us, we got the Fed. Fed had their meeting. We started the taper process. The budget looks like to be in process. Janet Yellen's on her way to become the next Fed chief. Everything's kind of moving along and progressing. So right now, we could be seeing some norms. So anything being reported, we could see some more logical steps in the process, so we can actually concentrate what they call the fundamentals here. So this is a good stage, as a lot of the reaction is knee-jerk reaction and sometimes illogical. Where the market, if we get good news, we should get good economic news. It should reflect in the market, but we haven't been seeing that all the time. So we may see that at least for some time here in the near future going forward. So stay tuned on how that's going to play out. So as a result, let's go ahead and take a look at the bond market. And a nice big rally today. We are basically at where we left off before the Fed made their announcement on Wednesday, if you look at the charts correctly. So we closed up at 99.84. Whereas Wednesday we kind of started just shortly below that, and it brought us up to the 10-day moving average. So anytime, if you notice on the 10-day moving average, every time we pull back too much, we always end up pulling back. It's kind of like a little magnet. If you get too far, it pulls you right back towards it, which is a good sign. And now it's hard to say exactly where we'll go. We could go up to the 101 level, kind of correct this at some point, depending on the fundamentals and where the stock market goes. We could see maybe some improvement. Much more past that, it's hard to really say. But right now we got an improvement in the rates, and we're kind of about where we were again before the Fed made their announcement on Wednesday. So thanks for watching, everybody, and I hope you guys have a wonderful weekend, and we'll catch you guys on Monday. So have a wonderful weekend. Take care.